This market is divided into four camps. You got the optimists who think there's a vaccine right around the corner, more on them later. You've got the pessimists who think it'll take longer. We won't get it fast enough to avoid a serious recession. You've got the blasé camp that believes the latest COVID outbreak is no big deal because the mortality rate's lower. Then there are the super pessimists who argue that spiking cases mean no sports, no going out, and millions of job losses. These four camps, I have to tell you, they are going at war. They're at war every single day, including this one, where the Dow gained 557 points, S&P advanced 1.34%, but the Nasdaq inched up 0.94%. Only one cohort can win at this time because there's just only so much money going into stocks. The recovery plays and the recession plays don't go up simultaneously as fund managers need to sell one group to swap into another. And that's why the Dow stocks did much better than the S&P, which in turn did much better than the once scorching Nasdaq. This is highly unusual, but it makes sense if you think of the market in terms of competing camps. So who's winning? Or who won today? I like to use the sore thumb index, as in which stocks stuck out like a sore thumb today. Let me give you today's examples. First tell is McCormick. The big spice maker roared to a new high, driven by fervent camp followers willing to pay any price. What do we know about McCormick, aside from the fact that they make this, okay? What do we know? Well, it reported a huge blowout 3 weeks ago, hotter than Frank's hot sauce, hotter than crushed red pepper. But after spiking up on news, investors took profits over the next day and a half, and the stock gave up just almost all of its gain. What did McCormick do wrong? Was it the conference call? Did they pick up less aisle space in the supermarket? Was there some hidden metric that was weaker than expected? No. I'll tell you what happened. McCormick happens to be the ultimate stay-at-home recession stock, but it had the misfortune of reporting on a day when it seemed like America was reopening and COVID was under control. Now the stock is roaring and it sticks out like a sore thumb. The strength of McCormick tells you that the recession camp is ascendant. And people are betting on at least a partial lockdown. If you can't go out to eat, you're much more likely to cook at home. And if you're cooking at home, you need McCormick. When McCormick spikes, it tells you that 15 million jobs could be threatened because restaurants and bars might not be able to stay open. It's also a sign that people are betting on the no more stimulus theory. At the end of the month, the federal government's expanded unemployment insurance program comes to an end. That's been a critical lifeline for American consumers. If Congress doesn't pass another stimulus, it could be a disaster for the economy. But McCormick's exactly the kind of stock you buy in that scenario.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.